All right, sounds great.
All right, everybody. Well, welcome back to the U.S. NPL Summit. This is Troy Full with Pinnacle Investments, and I've got a great friend of mine, Kurt Nederveld, the CEO of Rainstar Capital Group. And you can go to RainstarBrokerNetwork.com and Rainstar Marketing are two of his firms that he oversees. He graduated from Calvin College, based in Grand Rapids, Michigan, just right outside.
Yep.
Is that just right outside of Michigan or outside of Detroit? Right now.
Yeah, outside of Grand Rapids. Yep.
There you go. Okay. No, that's a business with a Michigan with a BA in business. He's active in leadership roles in his church, Gideon's International, and his role as a husband, father. Enjoys reading, playing basketball, tennis, jet skiing, and spending time with his family. He is a cancer survivor and is active in biblical counseling. So I'm going to let me read it. You already got a huge fan in the room here, Kurt. She's my right-hand gal here. She's like, yeah. I will read the rest of it.
Good.
Rainstar Capital Group is a multi-strategy private equity firm based in Grand Rapids, Michigan, that makes investments in consumer distressed debt portfolios, small business merchant cash advances, distressed mortgages, high growth companies, residential and commercial real estate. As a capital management and advisory firm for RCG, focuses on the growth of its portfolio acquisitions along with serving its portfolio companies, clients, and clients. RCG provides advisory debt capital through its multiple lending platforms with over 200 registered lead lenders for clients with commercial real estate, corporate finance, small business, and equipment financing needs. Product lines include unsecured lines of credit, revenue-based lines of credit, revenue-based advance, merchant cash advance, business lines of credit, inventory financing, purchase order financing, equipment leasing, accounts receivable factoring, CMBS loans, agency loans, bridge financing, hard money, and consumer contractor credit lines.
You got it.
All right.
I can tell you, Troy, we never have a dull day here at Rainstar Capital Group.
I get it. I love that you do all the things that you do because it has such a huge value that your firm brings to our market and our niche and the people that play in it. And to have you back again, I know we did an event last August, and you and your team were there. We had several people get lines of credit with your firm, and to have you back again here today is an honor, both for me and Kim and the people here in the room, and obviously the people that are out there listening. So I'm going to go ahead and turn over the controls to you and let you share with us a more in-depth understanding of what you guys do and how you guys can help us. And at the end, we'll have some questions and go ahead and tackle those. So, by the way, anybody, if you have questions, feel free to put them in the Q&A box, and we'll get to those at the end. So with that being said, my dear, wonderful friend Kurt, take it away.
Thank you. I appreciate the opportunity to speak with you, Troy. Always a good time, and always good to speak with your audience. So welcome, everyone. Again, my name is Kurt Nederveld. I'm the CEO of Rainstar Capital Group. I'm excited to share with you today the opportunity that is in front of everyone to be able to become successful in this space and to be able to grow their portfolios and grow their business. And kind of one of the big messages that I have is the number one thing that typically holds real estate investors back is capital. If you talk to most investors, most investors aren't normally needing more properties to buy. They're normally not needing more notes to buy. Normally there's availability to be able to find the assets. The battle is always money, right? And it's always the lack of money that holds back the entrepreneur, right? And so what we've been able to assemble here at Rainstar Capital Group is a very diverse platform of different lending sources. And we're going to go through that later in the presentation. But one of the things that I think most of the folks watching this video will appreciate is not only do we provide debt advisory services, but I've also been in your shoes, right? So similar to Troy, we invest and have invested into the distressed mortgage space. Currently, we invest more in the distressed business and consumer debt space. But so when it comes to putting transactions together, not only have we put on our hat of the principal, of the actual buyer, but we also have kind of worked with all the different folks in the space, whether it be the lenders, whether it be our referral partners, or also the the direct borrowers. So today what we're going to go through is a presentation called Working Capital for NPN and real estate investors. And with that, I'm going to transition out from the video mode, and I'm going to go now and share my screen, and we're going to go into the PowerPoint presentation. Okay, so Troy, I just want to make sure, just if I can get a confirmation from you that everyone can see the presentation, and should be going up here full screen. Troy, can you pop back on a minute, please? And,
yeah,
and
you're awesome. Yeah,
you're good? Okay,
yeah,
great.
you look fantastic.
Okay, fantastic.
You look kind of small in that box, but your presentation looks fantastic.
Yeah, again, as we said, people don't want to look at me. They want the content, right?
Exactly.
All right, so I need I need to go, and I believe, where was it again that we go to? We got to X out the.
What are you looking for?
We need to. How do we stop the video again? Is it stop? Here it is. Never mind. I'm going to hit it. The stop video. All right. Can you not see me anymore? Can you only see the PowerPoint?
Yes. Yeah.
All right. Perfect. Okay. Great.
Although you look great in your jacket, and you were looking just fine, buddy. You're looking
good. Good. Yeah. Well, good. All right. All right. So let's jump into the presentation. If everybody has kind of a pen and paper, I'd highly recommend that you kind of take a lot of notes. We're going to be going through a lot of different subject matters, and so having a pen and paper would be would definitely be a good idea. So again, I'm Kurt Nederveld. Troy obviously had a chance to kind of go through our background. I launched Rainstar Marketing back in October of 2010. For the last 7 years, our marketing firm has served over 100 clients that have been primarily fund managers and direct lenders in the commercial real estate and the corporate finance environments. We've specialized in everything from email marketing, PR news releases, but what we're known for and kind of what we built our company off of was our LinkedIn marketing. And LinkedIn has just been an awesome platform. I've built just a kind of a very large network. I have over 26,000 contacts on LinkedIn, all in the banking, private equity, and commercial real estate spaces. And I kind of joke, LinkedIn is that, fantastic database that really allows you to be able to connect with really anyone you want, right? And so a lot of the relationships that the marketing firm created over the last 7 years are the same relationships then that our debt advisory platform here at Rainstar Capital Group, that we use. So we currently operate a platform of over 200 registered lenders. All of our lenders, we'll go into it kind of later, but they're typically like hedge funds, banks, PE firms, especially finance firms, and we're also very big in the fintech lending space. And a lot of those, a lot of the relationships that we currently have today are the current programs that you'll see on our websites and some of our other marketing brochures and such. From a team perspective, our team has definitely been growing. We are currently up to 25 managing directors spread out across different marketplaces here in the United States. We do have a couple open cities that we are looking to fill and have kind of an in-person presence. We're searching for someone that would be able to handle our managing director position. So continuing on, let's kind of go into the meat of what we're here to talk about, which is capital, right? Capital for most investors is the lifeblood of their business, right? And from an agenda perspective today, we're going to kind of hit on 5 points. Okay. First point is going to be, why adding non-banked financing products to your business, is really important here in 2017. our platform, well, we do provide, what we call A-paper financing, right? Folks that would qualify at a bank. Our platform primarily is built for folks that have been rejected by their local bank for, for whatever reason, right? And if you fall into that category, it can be a little frustrating, right? Because, maybe you went through a hardship, similar to what, Troy had said when he introduced me. I went through cancer, right? And, I was diagnosed with cancer at the age of 26. And that was a hard time. It was 6 weeks before my wife and I were about to have our first daughter. And, I had no control over that, right? And so what I've learned, though, as an entrepreneur, and just going through some of the experiences that I've been through is, the things of your past shouldn't really, they shouldn't, dictate what your future looks like, right? And so as an entrepreneur, I believe that you can put the right steps and the right, mechanisms in place to be able to accomplish your goals, right? And in the capital markets, that's kind of what non-bank financing programs do. They allow real estate investors and NPN investors to be able to acquire the liquidity that they need to be able to grow their portfolio. Okay, so the second thing then that we're going to go through is, why do NPN and real estate investors need working capital? What are all the different needs that actual working capital go for? Most folks just think it's, we need more money to buy more houses, or we need more money to buy another distressed mortgage, right? Well, when you really look at it and you look at it from a holistic perspective, there's actually a lot of other uses of capital that you actually do use in your business. And so we're going to kind of do a deep dive into that. Number three, we're going to talk about, what these non-bank lenders care about, which, similar to a bank, is going to be cash flow, credit, and collateral. But we're going to do kind of an in-depth look on, why are non-bank lenders there? What is their function? What is their role? And then, what are they looking for, when a borrower comes walking in through their door? Number four, we're going to talk a little bit about our platform, the lender platform that here at Rainstar Capital Group we've been able to build, how to instantly access, our 200 plus lenders. And then number five, which is kind of, I think, the meat of the presentation, which is, I think what most folks, are excited about watching this presentation. We're going to talk about what those financing products are, which financing products are in demand now for NPN and real estate investors. So before we continue, I just want to kind of throw a disclaimer out there. The presentation today is primarily for informational purposes only. Obviously, everybody knows with doing transactions, it's very important to get the professional advice from your legal counsel, CPA, accounting professionals. Obviously, as well, everybody knows there's a lot of income potential in investing into real estate and NPNs. But obviously, through this presentation, we make no representation, no guarantee of any sort of income potential or, obviously the ability to secure debt, right, through any of the, the sources or the programs that, we're going to show today. So continuing on, let's talk a little bit about why non-bank financing is crucial to grow your business. Of course, everybody knows on this presentation that banks are frankly really tough to deal with. If you don't have the 720 plus score, if you haven't been in business 2 years, if you haven't hit their revenue requirements and meet their financial ratios, they're a little tough to deal with, right? They don't want to, they kind of want the best of the best. And, sometimes if you've had a hardship in the past, it can be a little difficult to, secure financing for them, right? So typically a bank is going to look at that borrower and they're going to look and they won't lend, of course, if there is, if they don't have the 2 years in business, if, they're not meeting the revenue requirements, if they're not hitting the credit requirements, and then finally, the collateral positions that, most banks want. But banks want the best of the best deals, right? I think everybody listening to this presentation knows that. And so, why then is it that non-bank lenders are important? Because non-bank lenders are going to cover the gaps that, a bank won't help you with, okay? And that is very important when it comes to growing your business, because again, like we were talking about, if you don't have the necessary liquidity, but you get a great portfolio in, or you get a great, if you come across a hot deal that comes onto your desk, if you don't have the liquidity, you miss out on creating the ROI from that investment, right? So who are the non-bank lenders? Non-bank lenders typically fall into the categories of either private equity firms, hedge funds, specialty finance firms, and fintech lenders. For those of you listening and watching this presentation, I'm not sure if everybody's familiar with fintech lenders. Fintech just basically means financial and technology. It's kind of marrying the two together, right? So it's taking technology and the ability to instantly streamline the lending process for the purpose of getting capital out quicker. The easiest example I give of a fintech lender is, I'm sure everyone on watching this presentation has seen on TV Quicken Loans, marketing their Rocket Mortgage, right? They do a great job marketing, and their tagline is, click a button, get a mortgage, right? That's sort of an example of a fintech lender. And so fintech lenders not only can provide residential mortgages, but they can do student loans, they can do business loans, equipment loans, and also commercial real estate loans. And it's definitely, where we see the industry going. And so our firm, Rainstar Capital Group, picked up on that, very quickly. And, we definitely made sure that we brought those lenders onto our platform, because in my experience, and I think most business owners and investors listening and watching this presentation will agree, most borrowers want their capital yesterday, right? They don't want to wait 30 days. They don't want to wait 60 days to be able to get the, the capital or the liquidity. They have a hot deal now. They need money now. And so what we really like about using the fintech lenders here at Rainstar Capital Group is that we can fund clients in as fast as 4 hours. And that might seem crazy to somebody listening to this presentation, but it happens each and every day, and it's just really exciting. And the way we're able to do that then is because these fintech lenders have portals and have underwriting softwares that instantly and very quickly help them to make a lending decision on if they're going to extend a line of credit, if they're going to extend a term loan to a borrower. And so we really like partnering and working with our fintech lenders, because they help to provide what I call instant liquidity for a borrower, and that's so important. So let's transition now and talk a little bit about why non-performing note and real estate investors need capital, right? Like I mentioned earlier in the presentation, most investors think about the reasons that they need capital, and instantly they go, well, I need to buy more properties, right? Or I needed to buy more notes, right? And that's true, but you're kind of missing out on all the other things that you actually do spend and invest money into, right? And so if you look at kind of the list, right, obviously the first one, cash purchase notes or properties, right? Let's kind of start to think about some of the other uses of where working capital is needed, okay? So number two, cash for down payment funds, right? As most folks know, there's plenty of lenders out there that will lend to them at 60, 70% of the LTV of the asset, right? Well, that means that you as the sponsor, as the borrower, are required to bring in 10, 20, 30% of the down payment funds, right? And so what you can do with some of the solutions that we're going to go through later is you can get creative, right? So for example, with our lines of credit products, you could transfer cash from that line of credit into your business checking account, and then be able to use that as the down payment, right? And most folks, a lot of, Troy, I think one of the sessions you're teaching on next is, how to raise joint venture capital. To me, capital really comes from kind of like three sources, right? It comes from an equity partner, or what most folks know as a joint venture partner. Second, it comes from kind of what I call an affinity investor or a lender, right? It could be a rich uncle, a rich aunt, family member, a friend, a high net worth individual. So kind of, a private individual. And then third, it comes from, like a branded entity, right? And so one of the things I want to get across to everyone watching this presentation, here at Rainstar Capital Group, we do not provide equity for clients that are looking for like joint venture partners. We don't deal in equity at all. And then second, when it comes to, the high net worths and the private individuals, we don't have a platform of that either, right? So our platform that we have is primarily all branded companies, right? They're all fund managers, direct lenders that typically have, 20, 50, $100 million plus of assets under management. And so, I just encourage everyone, when you're looking to raise capital and you're looking to, create your capital strategy, it's very important that you really understand kind of the pros and the cons of working with each of those three categories, right? A joint venture partner might be great because you have, you don't have a loan, right? There's, it's a partner, they're in for it for the ride. If you create that ROI, they're going to participate in, for example, 50% of the profits, right? One of the things that we try to get across to investors is that, a joint venture partner is great, but if you're truly successful and if you're a good operator and if you know what you're doing, having a joint venture partner, it's sometimes not always the best solution. Why? Because if you look at the rate of, your cost of capital using these alternative debt programs, it's much, much less, right? And so that's kind of an interesting conversation that we'll have with investors, because, some people might go, whoa, I would never pay 18% on an alternative debt product, right? Well, my answer to that, or my question I would throw back at them is, well, what is your projected profit on buying that distressed mortgage and flipping it? And then the next question would be, well, what is your, what is the 50-50 split that you're going to then pay your joint venture partner, right? So it's important for all investors to create a very clear capital strategy and understand the use of these different programs, and then also look at what is your true cost of capital, right? Alternative lenders obviously are going to put their capital out at higher rates, but the beautiful thing, especially like if you're using a credit line, even, for example, even if that lender put their credit line out to you and charged you 18%, let's just, throw out a, big number, 18%, 25%, whatever it is, right? Again, if you're using that liquidity off of that credit line and you have the ability to turn that transaction inside of 30 days, for example, you're not really paying 18% on the money. But think about that. Most people, this kind of gets into what we call the consumer versus commercial lending. Most consumers, I think everybody watching this presentation today, no one would ever want to pay 18%, 25% on capital, right? I mean, on your personal credit cards. That's, we've been taught in society that that's not wise to do, right? But in our business, in the NPN business, the real estate space, we have to really take a step back and really look at everything objectively and understand that if, even if we are paying 18% on a credit line, but we only use it for 30 days, and, we pay out, whatever that interest rate is, the reality is if we're successful in what we do and we achieve and liquidate that property or liquidate that asset and we create that ROI, the reality is you will put more money in your pocket by using an alternative debt product, even if it's at 18%, than you would through a 50-50 joint venture model. So I really encourage folks to kind of, mentally think about that and understand that the cost of capital, even if it seems high from a consumer perspective, the reality is it's not when you're looking at it more from a commercial and a private equity perspective. So anyway, continuing on, the third thing, obviously closing costs, right? There's fees that are associated to the title company, legal costs. I mean, there's different things that come up in the closing process. And there's also, how many folks watching this presentation have had the situation of, they're scrambling, let's say their capital is tied up in a bunch of different projects, and they need a quick $5,000, a quick 15 grand, to be able to get the closing costs done, to be able to finish out that project, right? How powerful would it be if you had an on-demand, on-call credit line, for example, that with a click of a button, you could transfer cash into your account, and instead of having to run to your family member or your friend or a high net worth individual to quick borrow that $5,000, with a click of a button, you could get that capital, right? So we're going to go into that, a little later. The fourth thing, obviously, is purchasing rehab supplies. Most folks know if you buy the distressed mortgage and you take back the asset either through a cash for keys or a deed in lieu of foreclosure, a lot of those folks have not taken care of that property, right? That property is run down. I've walked. I'm sure a lot of folks watching this presentation have walked through homes that were either drug homes or just severely beaten up, for lack of a better word, right? Well, in that event, you're going to need to have liquidity to be able to get the rehab completed, to be able to get it back on the market, and then sell it to create, your ROI, right? Fifth thing, obviously, as we mentioned earlier, some of the closing costs is all your legal costs, right? And six, obviously, being in the MPN space, loan servicers have their costs, right? They typically, charge their monthly fees, even if you're not making any return on the asset, in the meantime, they still have monthly costs. So think about that when you look at the operating side of your business. There are operational costs that you have to factor in. And, I would really encourage everyone to think about their business from that perspective, from an operational perspective. There are other things. There's even other things that we didn't even list on here. I mean, there's marketing costs, right? There's your website. There's, bandit signs. There's all these different things that you have to pay for. And by having these alternative debt programs, again, they'll help to alleviate the cash flow, and they'll give you more tools to be able to, accomplish and grow your portfolio. So, all right, let's continue on. So similar to a bank, banks care about the 3 C's, right? Cash flow, credit, and collateral. Now, similar to a bank, a non-bank lender is going to still look at your cash flow, credit, and collateral, but they're just going to have less lending restrictions, okay? So typically what we see is that the non-bank lenders, they'll rely on the 3 C's, the cash flow, credit, and collateral, but typically based on their underwriting criteria and based on how they've raised their capital and what they're allowed to put their capital out into the street for, what they're going to care about is they're going to prioritize one over the other, okay? So that maybe they're more of a collateral lender. Maybe they put more weight onto your credit, right? Maybe they care just solely about the cash flow, right? So our job, here at Rainstar Capital Group, when we advise our clients, and your job, as the borrower or the investor looking to grow his portfolio, is to really identify, which lender, which of the items that the lender is going to focus on and which that they're going to prioritize, right? And then kind of the example I give, financing, it's kind of like putting a puzzle together, right? If anyone's, put puzzles together, that it's a bunch of little pieces, right? And so it's similar to what we do here at Rainstar Capital Group. A borrower's going to come to us and they're going to have certain financing variables, okay? And it's our responsibility to go through what we call our debt discovery process and understand what those financing variables are, and then to be honest with the client and explain to them the path that they can go down. We have a running joke here at Rainstar. We have probably one of the most diverse platforms out there on the market, but we don't finance 100% of the clients that come in through the door. It's not possible, right? We don't have a magic wand that we can just wave and then all of a sudden our lenders will just lend money to folks left and right, right? And that's really an educational process that we try to get across to our clients. Is that the good news is, even if you don't fit a program today, our role is to educate you about it, explain to you what those variables look like that you have to qualify for it, and then to show you, what you need to put in place to be able to make that happen. So for example, credit, right? Folks that come in with bad credit, we'll walk you through, which programs that we have that'll fit your profile. But then we'll also probably encourage you to get into a credit restoration program, right? If your goal is to eventually get back into bankable status, you have to put one of those plans in place, whether it's a credit restoration plan, whether, let's say, you run a business and your revenues are way down, you need to put some sort of operational plan in place to be able to boost your revenues and get back into the, the ratios of what the bank likes to see. Maybe it's a property improvement plan, right? Maybe the multifamily asset that you own is, bleeding cash, right? Or maybe it's, not properly, rented, right? There's different things that you can do to get back into the, the bankable status. And so a big, big brand that we're going to be launching is called bridgetobankable.com. It's going to be a website that we're launching. And, that's kind of our message, right? Is you use these alternative debt products to be that bridge, right? And, but what you want to do is be able to use the programs as a bridge so that you can eventually get back into bankable status, right? Because everybody knows on this presentation that at the end of the day, banks are where you do truly get the lowest cost of capital. But again, if you don't have these financing variables, if those pieces of your puzzle do not fit that bank, they're not going to do business with you, right? And so that's where, we in our debt advisory platform can kind of help you and identify where you're at in the process, and to be able to show you a path to be able to, get an access, or be the alternative debt programs or the bank products. So our platform, again, I've kind of mentioned that, but the profile of the folks and the companies that are on our platform are our banks. We do have banks. We have hedge funds. We have private equity firms. We're very active in equipment financing. It's a very big niche for us, especially like transportation and medical equipment is big, and then just your manufacturing equipment. Especially finance firms, pension funds, they typically like more your Class A assets, agency lenders, insurance companies, bridge lenders, and then, getting back to fintech lenders. Again, fintech, I really encourage everybody to, spend some time learning about fintech. Fintech, the benefit for the entrepreneur is that fintech lenders have the ability to get you capital quickly. And I think for this presentation to folks that are in the NPN space, we live in a very, react and move quickly market, right? So you get emailed a portfolio from the loss mitigation or the loan workout specialist at the bank. They want to know if you're going to put in an offer, right? And so if you had one of these fintech lenders in your back pocket, you'd have the ability to access liquidity a lot faster than obviously going to a bank or dealing with, the process of dealing with a private equity firm or a hedge fund who maybe have, just a longer time frame when it comes to, extending you the liquidity. So with that said, we're going to transition now. We're going to talk about the programs that are available to you as a NPN investor, okay? And so we have 6 main programs, and what I'm going to do is I'm going to kind of do a deep dive into each one of these and kind of give you some of the nuances. And then what I'm also going to do is talk a little bit about how these programs, can be used for your business, right? So one program might be better to buy rehab supplies. Another program might be better to, get the down payment money that you need, for your purchase. So I'm also going to go through, and I would encourage everybody to take notes on, here's what the program is, but then more importantly, here's how you apply it for your business. And here's typically what we see our clients using, for, using those products for. So the first one obviously is, all your purchase financing, right, for SFR and fix and flip deals. When it comes to investing into, real estate, into the hard asset, we have, a very diverse group. We have a couple, there's a couple of banner ads here. I know they throw out some different, different points and such, everyone listening on this call, go to our website, and then also we have just different marketing brochures that highlight a lot of different programs. So we have pretty much all the different fix and flip lenders and rental property, lenders on our platform. And so, these banner ads that you see here on this presentation, they're not the only programs we have by any stretch of the imagination. They're just examples, right? But our lenders typically come in when it comes to lending on the asset, and they typically come in, we provide the senior debt, right? So when you're buying a hard asset, most lenders will require the sponsor to put, 20, 30% down. That's typically the case as well across our platform. Is 100% financing possible? Sort of. Most lenders are not going to sit and lend you 100% financing. They're going to typically come in and bring you, leverage, but it's not going to be, at the 100% finance. We get a lot of requests, obviously, for the folks that have watched the infomercials. They hear the no money down piece, and they think that there's all these lenders that are going to do that. That's not really the case. You can maybe achieve that if you're getting private financing, but when it comes to our platform, most of our lenders are going to require that you have the liquidity for the down payment, or what we typically call the skin in the game. Okay. Another important thing I want to get across is there is a ton of requests for folks that want a lender out there that lend on one-off non-performing or distressed mortgage purchases. Okay, whether you're watching this presentation, you're just starting out, or you're middle of the road, you've been doing it for a little while, or you're a big fund. Obviously, larger funds are going to be able to access liquidity, from different partners and stuff. But on our platform, I just want to make sure everyone's kind of very clear about this. We don't have, a bunch of private equity firms, a bunch of hedge funds that want to sit and lend to the startup or the one-off investor who is, just starting out and doesn't have experience. I think, Troy, you have, maybe one or two folks that, or groups that maybe have done it, but I just want to get across to everyone watching this. We don't have on our platform, a bunch of lenders that want to sit and lend on, one-off programs when it comes to the distressed mortgage space. And typically, what we're seeing, the reason for that is it's hard for them to get their arms around the collateral, right? And so, they typically want to just lend on the, the hard asset, and not on the, not on the paper side of it. So. Typically, then we see that space being covered by either your high net worth guys, your private capital, or your joint venture partners. Okay. But what I'm going to show you a little later in the presentation is how, by using some of these credit lines and some of the other term loans, that there is ways to do it. But when it comes to bringing a lender in, they'll take a senior position on the 70% of the purchase price of a distressed mortgage. On our platform today, we don't currently have. Trust me, I'm always talking to our different fund managers, identifying if there's any groups that have a real strong desire to get into that. And from what we're seeing, there's not. So getting in, or getting back to financing for folks that are buying the single family rentals and the fix and flip deals. I encourage everybody to kind of check out our website, shoot me an email. We'll get you kind of a broad array of the different programs that we have. And, the great thing is there's lots of lenders out there that, they won't check your credit when it comes to buying rentals. There's also lenders out there that won't even look at your tax returns, right? They'll go off of stated income. So when it comes to investing into single family homes and fix and flip transactions, there's a lot of different creative lenders out there. And so, I would encourage anybody, that needs that sort of financing, just to reach out. We can get you some of our brochures on it, and then you can learn more about the nuances of those types of programs. So our second very popular program is our business credit card program. Okay, the great thing about the business credit card program is it's a perfect solution for startups. Okay. The business credit card program only underwrites, the borrower from a credit perspective. Okay, that's a really important point when we look at the 3 C's, because it's not really, collateral. There's no collateral that the borrower needs to put up. And then second, especially if you're starting out, you don't have any cash flow, right? And most lenders, especially all the fintech lenders, they underwrite clients from a cash flow perspective, right? And so the beautiful thing about the business credit card program is the fact that it's only underwritten from a credit perspective. Typically, the borrower has to have like a 700 plus credit score. Now, for folks that maybe have been hit hard in the past and their credit score is lower due to a bankruptcy, due to a foreclosure, due to life, right? Whatever it is that happened. The great thing about the business credit card program is you can typically bring in a cosigner. So let's say your wife has great credit. Let's say your husband or your spouse has great credit. Let's say you've got a family member, a friend. The beautiful thing about the credit card program is you can bring in somebody that has that 700 plus score that will help to provide the credit needed for the lenders to be able to get the business credit cards. So we use this program very heavily for clients that are starting up. We also use it from a debt consolidation perspective. A lot of clients sometimes will get stuck on those higher paying, either a term loan or what's called a merchant cash advance in the space. And merchant cash advances can be kind of a tougher product. They, from a repayment perspective, they pay back daily. And we see a lot of small businesses get stuck into those because of the prevalence of the marketing and the ability to kind of instantly and very quickly, normally inside of a couple hours, get a merchant cash advance, right? The battle is you don't want to get stuck in them. And so we actually use this program from a debt consolidation perspective to be able to help smaller businesses get out of those higher paying merchant cash advances. And so when it comes to real estate investors and folks buying NPNs, I'm a big believer in the business credit card program for folks that are in the NPN and the real estate investment space. The reason for that is some of the best investors that I know, they use this business credit card program for the purpose of buying rehab supplies. Now, you can use these credit cards to access cash, but it's a little cumbersome, right? So it's, most folks don't typically buy houses off of a credit card, right? You can't obviously swipe your credit card and somebody, pays for a house or pays for a mortgage with a credit card. There are ways to transfer cash off of the credit cards. It's not doable. It's just a little cumbersome. I mean, there's balance transfer checks. There's different strategies on how to do it. But what I was saying is the best investors that I know, they use this program for the purpose of their operational costs for their business, and then they also use it for their rehab supply. So let me, I would write that down: operational costs, and then rehab supplies. Okay. When it comes to rehab supplies, most everybody watching this presentation knows that there's going to be times in your business you have to run down to Home Depot, Menards, Lowe's, and you have to buy the rehab supplies, right? The paint, the flooring, the drywall, whatever it is to be able to rehab that property. The smartest investors I know, obviously it depends on the time frame that the flip will take, but the smartest investors that I know will use these credit cards. They'll go and they'll buy the 10,000, 15,000, however much money it is of supplies. And think about it. It's kind of like free money in the sense that if you pay that back inside of 30 days, you're just floating money, right? You're alleviating cash flow needs. And obviously if it's a quick flip, if it's, only needs cosmetic, rehab, the smart investors I know will just basically float that money, and then once the house sells, they get the money back, and then they pay it off. Typically, these cards, everyone, come in at like 0% interest for the first 6 to 13 months. That's also why it's such a valuable solution for a startup, right? Most folks know Troy, I know and all entrepreneurs listening to this presentation know. Sometimes when you start your business, it takes some time, right? It takes a little time to find that first portfolio to buy, or you got to get your marketing out there. You got to start soliciting banks for portfolios, or whatever it is your focus is. And the nice thing about using this capital at 0% is you just have to make the minimum payment. Okay. Now, obviously, the cards go to your typical credit card rates after that. But again, when you look at the cost of capital and you look at the fact that you're using this program for the purposes of like a quick turn, right? Running to Home Depot, running to Menards, grabbing the supplies, having it paid back in 30, 60, 90 days. Again, the interest that you're paying on those cards, it just becomes a cost of the deal, right? And you factor in that cost of the deal when you're running your projections, to be able to make sure that it makes sense. So the other side of the business outside of the rehab supplies, like I was talking about, is your operations, right? Most of the operational costs that you have can be paid via a credit card, right? Whether it be sometimes your loan, like if your loan servicer accepts a credit card, if you need to pay for your website, if you need to pay a marketing firm to be able to build out branding materials for you, right? If you need to go buy some bandit signs, if you need, whatever the operational cost of your business, most of the vendors that you will use typically will take a credit card. And so again, the business credit card program is a very good solution for when you're looking to float money. Okay. So continuing on from the business credit card program, the next program that we have for folks in this space is what we call our 48-hour working term loan product. That program goes from $20,000 to up to $500,000. Think of it very similarly to like an SBA loan. Okay. The term loans, we have a lot of term lenders on our platform. They're typically fintech lenders, and they'll provide your business an actual term loan. Okay. And the term loan can be used for anything. It can be used for, again, getting 50,000, 100,000 of capital to put into your business. And, most real estate investors don't quite, think of a term loan, but, when you think about it, let's say you get a term loan, typically the payback periods are anywhere from like 1 to 5 years. Well, that means you have, 50 grand, 100 grand, $500,000, whatever it is based on, the factors. And I'll get into a minute how these lenders underwrite it. But again, that's capital that you can use, right? And if you're running a business that allows you to turn that capital, which typically folks in the distressed mortgage space and the real estate investment space are, right? You can actually create a pretty strong high ROI off of taking in that loan or taking in that capital and then turning it before the full, principal and interest, is due, right? So when it comes to alternative non-bank term loan lenders, they're going to underwrite your business heavily from a cash flow perspective, right? Some of them are going to look at your credit. Obviously, if you see on this ad, for our 48-hour business working term loan lender, they require the borrower have a 660 score. And similar to like an SBA lender or a bank lender, they're typically going to see, 2 years in business, a minimum of $100,000 worth of revenue. And so again, is this a program that's going to be, really good for a startup? Probably not, right? Because the startup doesn't show cash flow and the startup doesn't have those, 2 years in business. Okay. And so as we go through these programs, everyone, I want you to think about, capital is just like a tool, right? And if you have different tools in your tool belt, you're going to be successful in accomplishing the project or your goal, right? And so as we go through these products, I want you to really kind of take a step back, look at them, and realize that each of these different programs are tools, right? And if you start to learn the different ways and the different types of programs or the different types of tools that you can add into your belt based on the 3 C's, cash flow, credit, and collateral, it'll help you to understand the importance of why you would want to have these programs, right? Different deals need different forms of capital. And I just encourage everyone to really think about that. And as we look through these programs, look at which one that you would be a fit for, but then also which one that you could be a fit for, maybe not today, but coming up in the future, once you've gotten your credit score up, once you've hit that 2-year mark, once hopefully that makes sense. So think of the term loan very similarly to an operational loan, right? Like an SBA loan or like a bank loan. You'll get the liquidity in, and then you're going to use that for whatever it is that you want. Now, the reason that we talk about, like this, our 48-hour business loan program or the term loan programs, I want you to understand that these lenders are not coming in and taking a position on your real estate, okay? They're not coming in and taking a position on your distressed mortgage portfolio, okay? This is a true business term loan based off the cash flow that your business is generating, through your LLC or your S corp or your C corp. Okay, so the beautiful thing again, this along with senior debt for purchasing assets, this is a way where you could get a term loan to your business, get the 100 grand, get the 250 grand, and then remember at that point you could take some of that capital and use it as the downstroke or the down payment to be able to buy the portfolio, or to be able to put the down payment down on a rental property, along with then getting senior debt on the lender that will then lend 70% LTV of the on the rental property's appraisal value. Okay, so anyway, that wraps up the 48-hour working term loan. So moving on, this by far is becoming one of our most exciting programs. This is a brand new program called our new credit, or actually not our new, our no credit check credit line. One of our fintech lenders provides this program. It's really new. It literally just came out a couple months back. And it's frankly genius. Okay, it's genius on the part. Well, it's genius a little risky on the fintech lender's part, but they're doing well from what from what our lender has told us. I think last time I checked, there are over 60,000 businesses nationwide that have already signed up for this program in the first couple months. And so, what the no credit check credit line is, it is a true on-call cash credit line. It is not a credit card. Okay, it goes from 1,000 to 100,000. Most folks want a credit line, right? For all the obvious reasons, right? You have 100% control of the money. You don't pay any interest on the money if you don't use it. It is totally on demand, right? And most folks, that's what they go to a bank for, right? They don't normally want a loan from a bank. They want a true on-call, what's called a revolving credit line, okay? Now, if you look at the capital market space and you look at the ability or the availability of, is there other providers that will provide these true on-call credit lines? That's not readily available. There's not a lot of providers out there that just sit and provide a true on-call credit line. Okay, so the fact that this fintech lender has come out with one is awesome, right? So let me explain to you a little bit about how the no credit check credit line works from a logistics perspective. Okay, this program, think about it. If that lender is not going to check your credit, what is it that they're going to check, right? How are they going to make a decision on if you get 5 grand, 20 grand, 100 grand, 50 grand, whatever the amount is? What do you guys think that they're going to underwrite? It's obviously the cash flow, right? And especially the other thing that's great about this program is they're not leaning against your real estate, okay? They're not leaning against the assets that you have in your business. What this fintech lender is looking at is your cash flow. Okay, and so what happens is when one of our clients applies with us for this program, we connect them in through our our fintech lender's portal, and the fintech lender connects. They connect into the business's online bank accounts. Okay, and then their software runs, and the analysis occurs, and it comes back and says, hey, we're comfortable giving this business 10 grand, 50 grand, whatever it is, right? And the neat thing then about that program is the speed at which we can get our clients funded. So that whole process of getting connected up into our fintech lenders portal, having them do the analysis, typically takes 4 hours or so. And in 4 hours, then we get an email, our borrowers get an email coming back and saying, hey, great news, you've been approved for 20 grand, 10 grand, 50 grand, whatever it is. And it's awesome. So we have a program right now that we can help our clients get liquidity by tomorrow, which on our end is it's a great thing, right? And for our borrowers is an awesome thing, right? They don't have to wait 30 days. They can go through this process and get approved for a credit line. Now how it works is once the client activates the credit line, most people think of a credit line, like from their bank. And obviously you want the ability to draw the cash, right? So, you normally from a bank, you'd write a check, right? Since this credit line is from a fintech lender, it's not from a bank. How it works is very similar to online banking. You would log in to your online, onto your portal, right, with the fintech lender. Let's say you were approved for, 20 grand, 50 grand, whatever it is. Let's say it's, 20 grand. Let's say you need a quick 10 grand for your closing costs. What you would do is you would click a button and you would transfer the cash, what you want from that line, into your business checking account. Once you have it in your business checking account, at that point you can, write a check, you can withdraw it as cash, whatever it is that you need. Okay. This program is awesome. We are experiencing so much demand for this program because, again, most business owners, most real estate investors, they want a true on-demand cash credit line. And the reason they want that then is because it gives them total autonomy, control, and the ability to use this cash for whatever it is that they want. So I kind of, advise folks that, are investing into real estate and into mortgages. Again, our business is one in which we need capital quickly. Having an on-demand credit line that you could literally click a button and put money into your account, later today, tomorrow, right? Is that not powerful, right? And whether it be for the down payment, whether it be, if you need a quick 5 grand for closing costs, how great would it be to have a true on-demand credit line that allows you to access that cash, right? Now, what we're seeing with this lender for the no credit check credit line is, and I'm going to go to the next one. We actually have 2 credit lines. We have a cash credit line, which is from another provider, and I'm going to get into that in a minute. This program is newer, right? And for the fintech lender that's doing the cash credit lines, we've already seen them bump up their rate, their limits. So what happened is a couple of weeks back, we actually got an email from our vice president of business development at that lender, and for the second cash credit line, they have bumped up their limits to 150,000. Okay, and that's exciting. That's awesome. From a fund management perspective, let's kind of take a step back and look what's happened, right? They've obviously built up a portfolio, and they're happy with the results, right? They're not experiencing a lot of defaults. The program's going smoothly, and so they're comfortable extending out, more liquidity. We anticipate with this program, the no credit check credit line program, we're estimating that this program will, the limits will raise, and that's kind of an important thing, right? So if your business gets into this program, even if you start out at a smaller amount, let's just say you started out at 10 grand, 20 grand, whatever it is. Again, that's not anything that you should, scoff at or not be happy with. And the other thing, that you should think about is, well, this is an opportunity for me to be a part of the portfolio of one of these fintech lenders. And as this fintech lender grows and as my business grows, their underwriters are going to continue to look at my business, the cash flow, how I'm growing. And so let's say maybe you start out at 20 grand and then maybe they'll bump it up later on to 40 grand, to 60 grand, to 100 grand. And so, it's an opportunity to, again, access a credit line that is a true on-demand credit line that, and think about it, guys. If you have bad credit, no one's going to give you a credit line out there, right? Because a credit line is a very risky product from a lender perspective. Somebody could take the cash and run with it. And so the fact that there now is a no credit check credit line available, it's awesome. It's a really great solution. So typically we see the folks that use this program, they use it for operational costs. They use it as an on-demand solution for small business owners. It's a great solution. Let's say you have a fair amount of accounts receivables and you were expecting a bunch of checks to come in today and they didn't come in and you've got payroll to meet this Friday. How nice would it be to, with a click of a button, transfer cash into your account, take care of payroll. Next week, those checks come in. And again, it's a solution to, help alleviate, your cash flow, your cash flow issues. So please make a quick note on the bottom of this ad. The requirements, you have to do at least $25,000 of revenue, okay, through your business LLC, okay? And you do have to be in business at least 6 months, okay? So make sure you make a note of that, okay? And then as we transfer to our next program, which is what we call our cash credit line program, notice that this is very similar, right? This program is provided by a competitor to the no credit check credit line. Take a minute, look at the bottom of the ad, notice some of their requirements. So this lender requires a 660 credit score, okay? Whereas the first one does not. They don't, require it's no credit check. And then for this one, they require that your business does at least $100,000 of annual revenue, okay? So again, the amounts we typically see through the cash credit line that we're getting clients kind of larger amounts for this one. And then again, this is the lender that just raised their limits up to 150,000. And so, what these two lenders look at, everyone, is your business bank statements, okay? And so they are going to care immensely about the amount of cash flow that streams in through your business. They're going to look at certain bullet points, right? They're going to look at what are your beginning balances? What are your ending balances? What is your daily average balance? Do you have any overdraft fees? Do you have any NSFs, right, or non-sufficient fund fees that are getting pulled, right? They want to know that if they extend that credit line to you, that you are going to have enough cash sitting in your account to be able to, help, obviously repay the credit line. Okay. So again, I just want to stress to everyone, the lenders are going to look at your cash flow. And one of the the jokes that we have is it doesn't matter how much revenue your business does. It matters how much you're holding in your account. Okay. So for example, let's go through a simple example. Let's say your business does $2 million of revenue. Okay. And, or it doesn't matter what the amount is, but let's just say you could even go larger. Let's say every single month you had $1 million of revenue that ran through your business checking account. However, if you have huge operational costs, if you have a ton of debt that you pay out every month, you have high overhead, and let's say every month you make $1 million, but then you pay out $995,000 or $995,000, you're obviously not managing cash. You know what I mean? And so one of the important things to kind of think about if you're going to apply for this program, you want to really take a look and to kind of do what we call a pre-underwrite. And we can help you with this, right? Our team of managing directors are trained in this. Just go grab your last 3 months, 6 months bank statements from whatever bank that you bank at, and then pull up your statements, right? Look at what those beginning and ending balances are. Obviously, someone that has a fair amount of cash sitting in their account all the time probably is going to get approved for one of these programs. Someone that has a lot of NSFs, you're probably not going to get, approved for this program. Okay. Now, for this program, we have a very robust marketing brochure that we have on our website. If everybody wants to kind of write this down, just go to www.rainstarcapitalgroup.com/Kurt, K-U-R-T. That's rainstarcapitalgroup.com/Kurt. You can go, and we have the full brochure, which breaks down all the nuances of this program, how many NSFs you can have, what the revenues are, just everything about it. So I encourage everybody to go. We're kind of going through both of these programs from a high level perspective, but I encourage everybody to spend some time, look through the brochure, see if you would feel like you're a fit. Again, our team can help you identify if you would be a fit for these programs based on just doing a quick pre-underwrite. So if you want to grab your last 3 months or 6 months bank statements, that will greatly help. And the other final thing that I would say about these two credit line programs is what's awesome is that we can actually apply our clients to both of them at the same time. So we allow, we have the ability, obviously, as long as, for this cash credit line, the borrower has to have a 660 plus score, at least to 100 grand of revenue. The great thing is, obviously, someone that applies for the cash credit line probably is a candidate and qualifies as well for the no credit check credit line. And so, again, this is a way that we help our clients to get leverage, right, to kind of leverage up. And again, why have just one credit line when you can have two credit lines, right? So really can't begin to say enough about the credit line programs. Again, when we look at our business, and the ability for somebody to get a credit line versus a term loan, most people want the credit line. They don't want the term loan because there is a set monthly amortization that they have to then pay back, right? Whereas with these credit lines, you truly have true authority over it. You choose, when you use the capital, how much of the interest you pay, et cetera, et cetera. You have true, control over it. So anyway, that kind of wraps up the credit line portion. The final program that we have is not for residential NPN investing, but it's for folks that are buying commercial non-performing notes. So we have a couple fund managers, a couple banks, and then also a couple hedge funds that like to extend liquidity for folks that are buying commercial NPNs, okay? Again, we have kind of a brochure that we've developed, kind of goes through a lot of the nuances of these programs, but if you kind of see some of the highlighted points, so these lenders typically will come in and lend at 50% of the purchase price, right, of the commercial NPN. So it's either going to be the purchase price or it's going to be 50% of the current market value. Obviously, when they run their amortization, they align it to what that mortgage is that they're buying, right? From a payment reserve perspective, there's creativity there, right? They have different ways to structure the transaction to be able to, help that investor, achieve the goal. And so when it comes to, the commercial NPN financing, obviously those typically are larger dollar amounts, compared to residential NPN financing. And so, kind of my message with that is, well, do you want to use all your cash with buying buying that commercial non-performing note, or would you rather be able to buy more portfolios by applying leverage into, the acquisition of your, commercial non-performing note? Okay. So again, a good solution. It's a way that you can, basically spread your risk and obviously, leverage the existing cash that, that you have. So along with that, that kind of wraps up the 6 core programs for folks in the distressed mortgage space and the single family and the rental REO space. Our platform covers a lot of different areas, guys. I mean, along with that, we do equipment financing, commercial real estate financing. That's very big for us. Obviously, if folks are buying commercial assets, multifamily, um, office buildings, hospitality assets, we can come in and provide a lot of the senior debt. Again, we have a lot of brochures, a lot of educational materials on our site for that. And then when it comes to the business side, we can cover everything else as well. So if you have purchase order financing needs, if you have invoice financing needs, we're very big with accounts receivable financing. One of the blessings that I think our firm provides to our clients is the ability to have kind of one-stop shopping. And most entrepreneurs and most investors, they don't care about where the capital comes from. What they care about is the ability for it to solve their goals and to push their business forward. And so, I hope through kind of our presentation and our time today that we've been able to, kind of go through, highlight some of the, the more prevalent, products here in the alternative lending space that, are more applicable for, for folks in this space. And, I really appreciate the opportunity to present and to talk about these things. It's something I get very passionate about, something our firm is, very, very passionate about. And, I look forward to, connecting and interacting with, everyone through this presentation. My contact information is here on the last slide. If anyone needs to get a hold of me for any reason, feel free to call, feel free to email. If anyone needs me to speak for anything, more than happy to do that. And, we continuously focus on, providing entrepreneurs and investors out there the education on how they can use the capital markets, to be able to grow their business. So with that said, Troy, if you want to pop back on, I know we're going to, I think, try to get, go to the Q&A section here. So looks like we have, hey, good. Can you hear me?
Yeah, I can hear you.
Okay, excellent. So looks like we have a couple questions. Are you okay, Troy, if I jump in and start going through some of these?
Yeah, I think the first two are about another subject matter, but
Sure.
the last two there definitely pertain to what you were talking about.
Okay, perfect. Okay, so the first question is regarding commercial non-performing, financing. Is it the lower of the two requirements? I'm going to guess they're referring to is it the, of the value of the asset or the value of the purchase price? Typically, at the end of the day, the lender is going to care about what the asset value is, right? Because that's what they're taking, that's what they're, at the end of the day, kind of taking a lien position against. And so, they typically are going to look at, the lower, to answer this, this person's question is going to be, definitely, the lower piece of it. The second question that is also related to the commercial NPNs, do we have to put 50% down? Yes, typically you're going to have to put, skin in the game to be able to, acquire the asset. So,
Kurt,
go ahead.
Real quick there. If they've got, let's say it's a $4 million building they're buying, and the balance on the loan is, say, $2 million. Will the lender lend the $2 million, being so the value is $4 million? That would be their.
That's good. Yeah, they're gonna require skin. You mean with no money out of pocket, no skin?
Yeah, I mean, maybe some money out of pocket, but not the full 50%.
Yeah, I think in that case, obviously, we would speak with our vice president of business development, and see if that's obviously a smoking deal. You know what I mean? And so there'd have to be some underwriting and analysis on that, and a decision would have to be made from the loan committee on if they would be comfortable moving forward. But
okay.
The lenders on that, from what we've seen, are they're creative, right? I mean, they know if there's a good deal to be had there, if you know what I mean. Obviously, if the sponsor has the marketing or the wherewithal to be able to source a transaction like that, I think some creativity could be used. So, All right, let's jump in with a couple other questions here. All right, looks like, okay. Do these programs work for clients outside the U.S.? Some do and some don't. I mean, our platform primarily is built around clients here in the U.S. We do have lenders that will lend to foreign nationals. It's kind of on a case-by-case basis, and really it's a little hard for me to go through all the product types that we have for that, here on this presentation. But if anyone has a foreign national that they're needing some sort of financing solution for, just shoot me an email. We can check with our fund managers and our lenders and then see see if that would be a fit. All right, next question here. Can you use co-signers for the business term loan? Under the term loan, do they look at tax returns or financial statements? Does your company help liquidate the business credit cards? Okay, a couple questions here, it looks like. So when it comes to the term loans, it kind of depends. Most the fintech lenders require that the borrowers, are using their personal credit, when they apply for the loan. They're also going to look at the organizational structure of the business, and they're going to look at the ownership structure, right, on who the ownership is. So when it comes to co-signers, we see the co-signer program working a little more effectively on the business credit card program, not as much on the on the term loan. Second question here: under the term loan, do they look at tax returns or financial statements? Absolutely. So again, the term loan lenders are going to underwrite that business and make a decision on if they're going to extend liquidity to them based on their cash flow, right? And with that, they're going to typically underwrite, the tax returns, the current balance sheet, P&L, bank statements obviously are very huge, right? A lot of the fintech lenders have softwares that will kind of do their custom analysis on on what sort of cash flow that business is deriving. And again, what they're looking for is they're looking for patterns, right? And they want to know if that they extend that liquidity, is that business going to be able to handle the debt service coverage, based on their parameters. So final question: does your company help liquidate the business credit cards? Yes, we have solutions for that, to be able to turn the credit cards into cash. Again, you can use business credit cards to buy houses, right? You can use it to transfer cash to buy a distressed mortgage. It's just not as easy as the cash credit line or the no credit check credit line, because with those programs, you click a button, the cash transfers in your account. When you're dealing with credit cards, there's balance transfer, checks that can occur, and it just there's sometimes when you write a balance transfer check, sometimes your bank might take up to 7 days to validate it. And again, it's just it can be done, right? You just if you're in a pressing I need cash now situation, I probably would advise you that the no credit check credit line, the cash credit line is going to be a little better of a solution basically. Okay. All right. Next question here on the list: does your company have solutions for defaulted equipment? Okay, that's what I was saying. Defaulted equipment loans. Yes. So most folks obviously are contacting banks for the purpose of buying out their commercial NPLs or their residential NPLs. We have some awesome equipment financing solutions for companies and banks that have defaulted loans tied to larger equipment. We actually have on the equipment side lenders that will lend no credit check and no income check loans for borrowers that are wanting to take out the note with their bank, right? And they're running the risk of, let's say they just got done with bankruptcy. And so for folks that are in the NPL space, it's kind of another niche outside of real estate, but it kind of functions similarly. And so, yes, we do have solutions for that. So, okay, Troy, how are we on time here? I know, what do we have? What, our 5 minutes or?
We got about 5-10 minutes.
Okay, great. Okay, Troy, I know you had a lot of folks at the table right there. Was there any other questions from them?
You guys got any questions?
Less expensive for someone to look at because of this problem.
So the question is, we have a client that has a high credit score, north of 720 plus.
Sure.
Are there lines of, and he's looking for some business lines of credit, is that right, Vicki? Okay, so basically we have a high credit borrower. Do you have programs that have less expensive fees for higher credit borrowers?
Yeah, we would typically take that to some of our banking relationships. So anyone that, I mean, my first question for a borrower like that, Troy, right? I think you said her name was Vicki.
Yeah.
I would pose the question to Vicki, why hasn't that client walked down to their local bank, right? Why haven't they gotten a true revolving credit line? So that's typically what banks want to do, right? They want to deal with the high credit, 2-year, businesses that have been in business 2-year plus. They do, plenty of revenue. My natural question is, well, why are you coming to Rainstar Capital Group, right? Why have you not just walked down to your local bank? And then typically they'll come back with some sort of story, right? Maybe their local community bank won't extend them the enough liquidity, right? Maybe they're in a niche, or the type of the business that they're in, that maybe they fall into the black, they're either blacklisted or just in general that banks, the bank that they have a depository relationship with, their risk exposure to that niche, they don't want to extend any more liquidity to. So again, it comes back to the concept of putting the pieces of the puzzle together. We have to go through what we call that debt discovery process to understand why it is that client, who has great credit from what you're saying, right? Why is it that they haven't gotten that liquidity from their local bank? You know what I mean?
In this particular case, the borrower is just under the 2-year mark of being in business. Great credit, great payment history, just they're not 2 years plus in business, according to the bank. So the bank wants 2 years or more.
Yeah, so what we would do in a situation like that is we would look, again, we'd go through the debt discovery process and we would analyze, and that's kind of the fun thing for everybody listening.
Mm-hmm.
With the diversity of our platform and the breadth of our platform, we're not limited, right? So, I mean, if we just did equipment financing, we couldn't help you with commercial real estate. If we just did commercial real estate, we couldn't help you with working capital, right? What we have the ability to do is kind of sit down and do a full analysis. And so for that company, we would obviously go through and do the analysis and say, okay, where else, what are their assets, right? Is there commercial real estate, is there equipment, is there accounts receivables, right? Do they have any sort of outstanding invoices, right? That maybe one of our fintech lenders could extend a line against, right? So we would do an analysis with that client, and it sounds like they would actually be a good client because they're right there, right? They would use these alternative products. And, in the 2-year mark, as long as their revenues continue to climb and to grow and their credit stays good, they can jump off one of these solutions and go to a bank line, right? When it comes to kind of stacking capital, what I mean by that is, clients have the ability to get lines and get liquidity off of their different assets, whether it be their AR, their inventory, their business credit cards. That's kind of what I'm trying to get across to everyone, is that your business has the ability to attract capital to it. You just have to know how to attract capital, and you have to know what these lenders are looking for, right? So that they can be able to extend the liquidity that you need. And then once you have that liquidity in under your management, you can then begin to use that for the different transactions and the different deals that are presented to you, because you have those tools at your disposal.
Right. That's great. You got a question, Darren?
What if you were a sole proprietor, but you converted over to an entity? But that entity hasn't been established for 2 years, but overall the business has been established for 2 years. Would they still consider that a full 2 years, or does the actual entity?
So the question is, if the business has been in place for 2 years plus, but the first portion of the business was a sole proprietorship, then they incorporated it, but collectively together it's over the 2-year mark. Would it be looked at as being over the 2-year mark, even though it was a sole proprietorship in the beginning and converted to an LLC or an S corp model?
Yeah, it's going to depend on the lender. Typically, they would want to see it from the LLC perspective, the entity and the business checking account. That's a special situation that, we might be able to speak to our lenders about, depending on the type of business that they're in. Again, it, kind of comes into the question of what else does that sole proprietor have, right? Do they have other assets? Maybe do they own equipment free and clear? Do they have strong AR? It kind of depends on, a bunch of those different factors, but typically most lenders want to see, we see this a lot too, right? Like when you have like a management buyout, or let's say you have like a merger acquisition, the lenders are going to look at, kind of the strength of that new entity that's buying out that business, right? They're going to take into effect, of course, the last running track record of the existing operation, but they're also going to take a look at at that new entity, what that strength looks like of those the new buyers, for example, and from there make a decision on if they'll extend liquidity.
Great. That answer your question, Aaron? Okay. Yes, Jay.
I just have the same question as everybody else, and I'm not sure what program to look at, or if it's going to kind of, for people that are in this room on this broadcast, what would be the best one to focus on for us?
So I can kind of answer that. So the question was, which is the best program for various people? And I guess I'm going to answer that for you, Kurt, and that is the best thing to do is to reach out to Kurt and his team, and then they'll do a private consultation with you and match your goals and your current situation to their lending programs. Although Kurt's presentation was 5-star, he can only put so much on each slide, and he can only talk about so much in the time period that we have. So I would encourage, whether you're in this room or you're listening to the recording, to reach out to Kurt. I mean, he's got a great team that is willing to lend a hand, and you can obviously bring your scenarios to his team. But if you know other people that are looking for capital, I know Darren, you've got a couple of clients and stuff like that that are always in that space looking for stuff, then I would reach out to Kurt as well and just say, here's my scenario. Is it a go or a no? And and he'll also tell you that right now we can't do it, but if you do A, B, and C, then in 3 months we can do it, type thing. And that's really the point in bringing people like Kurt around, is because they've got this tremendous amount of knowledge about their niche, but it kind of has an overflow factor because they understand our niche as well. So he understands the challenges that we face, so he can kind of put it into language that the lenders understand and bridge that gap, which is a valuable service for people like all of us sitting around here listening to the web class here. So my encouragement to everybody listening is just to give Kurt a call, if not this week, next week after the holiday, and he'll either answer the phone or he'll match you with a team member that'll walk through your goals, your objectives, and your situation, and find the best for you.
I would agree with that. Oh, go ahead.
No, I'm just listening.
What I was going to say is the other thing you have to really ask yourself is, what is your goal, right? What is your goal? Then you have to ask yourself where you're at from the 3 C's perspective, right? Cash flow, credit, and collateral. Once you kind of grasp the 3 C's, cash flow, credit, collateral, then you'll be able to look at the available programs, and then typically what we do is, we're always asking what is the use of funds, right? What do you need this liquidity or this capital for, right? And then based on what you need it for, we'll kind of reverse engineer, on the amount, right? We'll reverse engineer the process of understanding where you're at from a 3C's perspective, and then we'll come back to you and explain, the availability of which products, why we think those products or that one program or multiple products would be most beneficial for you. And then, obviously from the entrepreneur perspective, you need to make a business decision on if you want to move forward with it or not.
Absolutely. All right, Kurt. Well, we're right now at the finish line for
perfect
call.
timing. Right on the dot. So that's good.
That was awesome. It was awesome. Well, I appreciate every thing you've done. I appreciate all the hard work you put into your presentation, and I know the people in this room are very excited about it, and the questions actually reflect that as well. So I'm sure there's a lot of people that see the value in your service, and as I mentioned a moment ago, reach out to Kurt, his team. They'll sit down with you. They'll do a little private consultation with you and figure out how to take your business to the next level to attract the capital you're looking for. So with that being said, Kurt, thank you so much for being here today. I hope you have an amazing week, and we'll talk to you after the holiday, okay?
Awesome. Thank you, everyone. Appreciate everyone's time. Have a great day.
Thank you. Bye-bye.